Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining us in today's video. Before we start, make sure to subscribe to our channel so you don't miss out on any of the future content. While you're here, give our video a like and make sure to leave us a comment below with any questions so that you may have or suggestions for an upcoming video. If you'd like a more in-depth look into our trading day, we would love for you to swing by and join us in our live trade room for 3 days, and it's totally free. A free trial link registration that you can find right down in the description box, or by going to ssftg.com. So let's jump into today's video. All right, so for today, we're going to be going over the understanding and the importance of break-even points. Now, one of the big reasons why I watch them is to know where previous traders may have entered, right? Now, if we're talking about break-even points, just so we're on the same page, as an example, it is relatively arbitrary because there's an entry point literally anywhere on the chart. I'm specifically talking about for the way that I trade, as usually more of an intraday trader, scalper, that type of trader. That's going to be the type of trader that I'm going to be assuming on these trades. I'm not going to be paying attention to the swing traders who are buying because of a daily picture or none of that. When I'm looking at a 5-minute chart, I'm looking at other traders trying to get into their mindset of what they would be doing specifically, regardless of anybody else. So keep that in mind. So when we're talking about break-even points, again, that shows us where previous traders might have come in. And one of the big reasons why that's useful should be fairly obvious. If I know that a lot of sellers entered below this candle to short, when the market comes back to that point, what happens, right? Do the sellers defend it aggressively? Does it come back through and they're not really there anymore and sellers lost interest? There's a lot of information that you can derive just from knowing where previous entry points have been. They also allow us to understand what traders may have been doing at the time and more importantly, where, right? If I'm a seller and in this case, I'm tracking sellers. If I'm tracking sellers and they're shorting here, why would they be doing that, right? What context would a seller be using down there? To be shorting underneath this bear bar? What would they be using? Well, they've got some previous structure over here. We do have a very weak failed bear bar down initially, but buyers failed to break to a new high. That's a great sign for sellers. We're coming off of previous resistance, and the signature entry point right below the candle would be back underneath that area too. And it's also in the face of a big bull bar that should have gone, right? Bar 4 buyers, where are they? Why did they fall apart? So a lot of sellers, if they're going to be shorting under here, it makes sense. Okay, so we know what they're doing. Where are they going to be playing this trade, right? If they're going to be shorting underneath this, likely their stops are going to be above the highs. But wait, why put a stop above this when I can just put it above the high of day for a couple ticks more and increase my probability that much more? So there's going to be a big chunk of stops up in this zone. It's not a spot, it's a zone now. And along with that, where are their targets going to be? Well, based off of this information, first off, we already know it's the S&P. There's going to be scalpers, 4 ticks, whatever. I'm not paying attention to them. We're looking at larger targets because the volatility is higher. 4-tick scalpers will obviously be there, and they would have been in and out in a couple seconds. Looking at the wider picture, though, we've got 1-to-1 traders. They're not going to want to sit through any less than 1-to-1 for their risks. So they're looking for targets back down to the bottom of bar 4. 1.5-to-1 buyer or sellers are looking for a little bit more, probably to the low of bar 3. And 2-to-1 sellers are looking back to where there was previous structure, right? So we know what they're going to be doing there. And if we know what they're going to be doing there, that gives us some advanced information. Because now we know that if this market is relatively sideways and choppy, and I maybe want to be a buyer down here, right? This is the open, right? Or the settlement price. That's where we're looking to bounce off of. We're bouncing off of the settlement price. We have a bull bar up. Now, you know me. I don't want to be the first one to the party. No thanks. So I'm certainly not going to be buying above that. But when bar 8 shows up into a huge failure on 9, buyers will be buying above that, knowing that all of the shorts who were short here, they're already out. They got a ton of targets filled. They went all the way down to 2-to-1. So a lot of the sellers who are holding this market down and pressuring it, they're not there anymore. And the only sellers who are there right now are the ones who got stuck selling below bar 8. So the only thing that's going on right now is that sellers are stuck. And there's more information when it comes back down and allows those sellers, again, knowing where these break-even points are. Notice where that wick turned around? It went all the way down, got those sellers who realized they screwed up, and it reversed all the way back up. That was another break-even point test. Right? Sellers selling below bar 8 looking for a leg continuation. Didn't get it. They got dumped on. No thanks. I don't like that bull bar 9. I want to get out if they come back to break even. Bingo bango, bounces all the way back up again. That's why it's so important to know where traders are getting in, where they're getting out, and along with that, why, right? Where are they getting in and where are they getting out? What location, what context? If buyers are going to be buying down here, right? Well, we know that they would have bought below that low because that's what a lot of traders do. They'll buy the previous low of day and they'll accumulate a little bit more. So when the market cracks through it and shows very obviously that they were wrong, when it comes back, what does it look like they did? They exited. They got out of the way. They sidestepped it. Like, nope, no thanks. not interested. Peace out. And it rolled over. But when they started showing good conviction to the upside, what ended up happening a little bit later? Buyers have an aggressive long signal that fired off on bar 55. Notice what the market wasn't even allowing to come back to. They're defending it so aggressively, they're not even letting it take it out at break even. They're buying ahead of it. That's how that's the importance of understanding where these are. And again, knowing the time frame that you're trading from, right? If you're on a 5-minute time frame scalping, then pay attention to what the scalpers are doing. If you're on a daily chart looking at what daily swing traders are doing, then look at a daily chart and understand what they're doing from a swing perspective. Discount the rest of the stuff because it's not going to have much of an impact. Now, if you're a scalper, knowing where swing traders will likely want to get in can be useful, but you're still going to want to go into that faster time frame to narrow down those entry points. And then, of course, along with that, just to kind of help along with just giving us really good locations, is it allows us a little bit more certainty in what the likely outcome of a situation is going to be. If it's obvious that sellers are getting dumped on and it pops higher and it's showing that sellers are just selling more, then you know what the outcome is probably going to be. It's probably going to keep going down. It adds that little bit of boost of confidence that you may need to get that trade on the table in the first place. Definitely very useful to understand where these break-even points are, and something I would highly encourage people to pay attention to because, well, you see all of the reasons, and if you go through your chart, it's one of those things that once you see it, you can't unsee it. You'll pay attention to it all over the place because these levels are insane. Definitely something to consider adding to your tool belt. But that's going to do it for this one. Hopefully you found it useful, interesting, entertaining. And as always, if you have any questions, feel free to shoot me an email, jhb@ssftg.com. Until the next one, we will see you all then.